So this was a seven-figure day for me, both with the trend on the news and the counter trend. It becomes more powerful when these trends are aligning on multiple timeframes. I'll never be long if a stock is steadily holding below VWAP unless it capitulates. Because what happens is when everyone's being liquidated, when everyone's scared, that leaves everything so skewed the other way. This is an A setup for this is a B setup, this is a C setup. Then I'd have set risk amounts. This is one of those stair-stepping, as beautiful patterns as you can imagine. To build this awareness and this consciousness, you need to be drilling yourself in real time. That's so often what I look for is my number one, probably favorite thing to signify an end of a trend. So that's how you avoid a rip. That's how you stay with the winner. And that stuff adds up big time.
All right, welcome back, everybody. It's my honor to introduce our next speaker, Lance Breitstein. He is an ex-Trillium top trader. He's also an advisor over at SMB Capital, and we're really excited to have him here today, talking about more than just friends, a trend love story, introducing a new perspective to our conference. So Lance, thank you so much for taking the time, and really looking forward to this one.
Thank you, Rich. Very happy to be here for my first TraderLion presentation. I think at the least, I should probably get at least 1 star for like the witty creative presentation title.
For sure.
As Rich said, Lance Breitstein, you can follow me on Twitter at @TheOneLanceB, where I drop a lot of fire knowledge. And because I come from the prop side, of course, it comes with compliance and legalese. A lot of disclaimers. Essentially, my presentation might cause dizziness, headache, loss of capital, loss of everything. Everything you could ever blame could happen. But hopefully I make it all worthwhile. But this does entail risk and everything else. More disclaimers. And nevertheless, we will jump into this. So here's what we're going to cover today. I'm going to share with you why you all need to live and breathe and trade with the trend. But in order to do that, we're going to define trends themselves at a very basic level. We're probably going to analyze them deeper than you have ever analyzed them before. And once we've defined them, we're then going to talk about how you can build trading rules around them and how those trading rules can help you capture big moves or also stay out of trouble. And then we're going to analyze what causes trends to begin or end. All of this together is going to help in a very practical application of how to use this knowledge and implement it into your trading. Every single presentation I do, I want to make it as actionable as possible so that come Monday, you all have something that you can do to elevate your trading game. So let me help you. I understand your style of trading. I understand what you guys are looking to achieve through this. We all want success in the markets. And some of you might be newer, some of you might have already found some level of success, but there's always a step higher, and part of trading and part of growth is always getting there. So whether you're frustrated or whether you're feeling good, we're still going to find room to improve. And, no matter how good you get, trading is never easy. It's this never-ending journey, but hopefully I'm going to push you forward one extra step. So here's how it started. Nothing short of swimming upstream. I started my career in 2011 at Trillium Trading. And despite where I am now speaking to you all, it was not an easy start. I was one of the slower learners in my trading class. All evidence pointed that I was likely going to wash out, despite having one of the best trainers and probably one of the best day traders on the street at the time. I was not gaining any ground. I was interviewing for other jobs, and I was losing faith and hope on myself. And this was even having a pro trader kind of feed me some of his strategies. I had an environment for success. I had this incredible technology. But really what would happen is even though I would have some decent trades, I would always have these big losses. And I kept improving. And this was really a trait even of my trainer, having some of these really epic wins just because some of what we did had so much edge, but a lot of it would just be sent into the ether, just millions of dollars burned in dumb places. And when I started to analyze that and really go deep, at that point in my career, I was starting to really excel. I was even approaching the top 10 at that time, but what would really keep me out of kind of the top of the leaderboard was every year I would just have millions of dollars in kind of big losses, and nobody else in the firm was kind of really doing that. And it's like, wait a second, Lance, like this isn't so normal. Like if I can just remove Obviously, losses are a part of trading, but if I can just avoid some of these bigger ones, that's going to have such a disproportionate effect on my trading. And so I did this very big deep dive on my whole career at that point. And one thing became abundantly clear is that on my best trades immediately went in my favor. And my absolute worst trades and biggest losses, those were all trades where I was fighting the trend, and they essentially never, ever went in my favor. And it sounds paradoxical and almost like it's hindsight, but it's not, right? There's trades that immediately work and there's trades that don't. And so often that's because we're fighting the trend. And as I've now worked with probably hundreds of other traders, 7-figure traders, 8-figure traders, beginners, whatever, every experience level, it's such a commonality that our best trades tend to work in our favor. Not all of them, but definitely most. And it's a heuristic that we can start to then kind of work with. So how did this end for me? Nothing short of world domination. What I really wanted to do today was kind of share some of the P&L stats. Compliance ended up nixing that, but I did end up sending P&L screenshots to Richard. You get so many just haters on Twitter. Oh, Lance is a scammer, which I always laugh at because I have no sold product. Oh, Lance blew up or Lance that. Nope. I just run a nonprofit now to try to give back to the world. I promise you, Rich has seen some awesome 8-figure P&L, and these trophies I like to think speak to themselves. So Rich, can you verify to the public that I am who I say I am?
Yeah, I can attest to what I saw, and I can attest to that for sure.
I also like to think, while people probably can buy their own trophies, it would be a very sad day if I ended up faking trophies. And so what you see here is I had pretty much the highest annual trading P&L ever in Trillium's history. They're one of the oldest firms on the street. And you see a lot of Trader of the Year trophies and top 10 trophies. So, really, I left on top and I did it so I can share some of this knowledge and help you all get better. And that's what really kind of excites me these days. So let's do it. The trend is your friend. One of the most famous sayings in trading, and probably my favorite one ever, honestly. And it's attributed to Jesse Livermore, famously known for reminiscences of a stock operator. And so let's dive into this. Like, the beauty of a trend is your friend is it's a principle that I've really verified through my own experience. So many cliches in trading are just total nonsense. But in my own experience, none held up stronger than that the trend is your friend. In fact, the more and more experience I gained, the more I sought to live true to this mantra. When I was trying to elevate to the really big leagues, it's really the one conclusion that I came to. And I've spent so many years where my sole goal for that year might be to live with the trend, to never fight it, to always consciously ask myself, am I with the trend or am I fighting it? And so many of these trades, it held true to that heuristic. The best ones went to my favor, then the millions of dollars were incinerated when I was fighting it. So I really wanted to live and breathe, spend every moment of my trading. And really that study is what transformed me to really reach number one. And knowing what you all kind of do in your style of trading, it became clear to me this was the most value I could offer and give you actionable insights. Oops. Uh-oh. We're falling apart here. So why live with the trend? I think part of the beauty of living with the trend is when you're trading with the trend, not only does it increase your win rate because you're no longer fighting and you've got all these market participants on your side, but being with the trend really increases your reward. Like we were hearing in that prior presentation with Chris, so many times you can end up capturing some really surprising epic moves when that trend is going in your favor. In fact, you're opening yourself up to all that positive asymmetric skew that traders traditionally love. The other beauty is that trading with the trend tends to minimize the drawdowns and the heat you need to take on a position. No longer do you need to really average down positions against you. No longer do you need to trade with a stop. So often when you're really going with that trend, just by the fact that you are kind of riding that wave, even when trades fail, your losses will be less than they would be otherwise. And I know what you're thinking. Can everything even be structured with the trend? And I'm going to show you how the answer is yes. Even mean reversion trades and trades that I like to call with the counter trend can be structured to be with the trend as well. And that's one of the things that really helped me because so much of what I did was mean reversion. So let's start from scratch. what even is a trend? Have you taken the time to ask yourself this? How do we define it? How do you personally define it? It's so important to ask that question, because without doing that, you then can't go to the next step of what the implications are to your trading. So let's keep it simple. Trending stocks, what I would call being in an uptrend, are moving in a generally upward direction, encountering new prices. A downtrend would generally be in a downward direction. Another way to think about that is just going back to basic math and algebra, kind of just the slope of the line. So if something is sloping upwards, regardless of what it's doing, generally it's in an uptrend, opposite for the downtrend. So this is in contrast to what I would define as range-bound or consolidating stocks. Those are staying within a band of past prices, often have a slope of 0. And really those two groups, just doing that simple categorization, can have really big implications for how you treat and trade these. I see so many traders churn away and take so many paper cuts when stocks are consolidating or range bound, rather than just waiting for the true break when they then begin to trend. So let's go one step further than that general uptrend definition. So I really like to look for anything that's upward sloping, and we're going to start to add more nuance. But this spider chart, it's a 10-year chart, and as you can see, like, we have some really deep pullbacks, right? Like especially during COVID here, but nevertheless, our slope, if we were to graph this, is clearly positive. So another way, or a further way, I guess, of defining trend is making higher highs and higher lows. So what does that look like? And so the way I view stocks, like this micron chart from February of this year to present, I drew these yellow lines so you could all see how I kind of view these stocks in legs. And we have one initial leg higher, we have a lower high on that pullback, we kind of retest those highs, we have another lower high, retest the highs, lower high, retest the highs, lower high, and boom, we break out. And so this subsequent pattern is something that I would say is not just in an uptrend, but it's in an uptrend making higher highs and higher lows, which is one of the nicest patterns you can really see. This is another example, NVIDIA. It's funny, I clipped this chart prior to their earnings release, but what do you know? That pattern kind of really continued. And it's so funny. I knew people that were shorting the stock prior to those earnings. And it's one of those things where it's like, at the end of this presentation, some of those people, they should be asking themselves why. Because what we had here was a stock that was going up, very shallow pullback, another leg higher, beautiful consolidation, right? Like the stock went from 140 to 280. That's a double in a matter of a couple months, and it's not pulling back a dime. This is one of those stair-stepping, as beautiful patterns as you can imagine. Sure enough, they get earnings, and the rest was history. This was fatefully the one stock and chart I chose, which then happened to just really ignite the whole market rally, especially in the semis. Not so coincidental, given where the momentum was headed on this. Another way of defining trend, I think this is a common one for a lot of people, is holding above VWAP. So NVIDIA on May 18th, this was again before the blowout earnings, but it's not coincidental that this the market was a little strong this day, and this thing just took off. And VWAP, volume weighted average price, we held above it the whole time. I know people might short this type of thing. I'm going to give you rules that help you avoid this, because at least for my system and my way of viewing stocks, nowhere on this chart was this a short. We're holding above VWAP the whole time. Another way is holding above a moving average. We're going to use for solar here. It's just a 1-year weekly chart. And I think it's important that I'm showing you all different time frames. Everything I'm teaching here is applicable to all time frames. My view of technical analysis is much like fractals. It can be infinitely zoomed out, infinitely zoomed in. The concepts hold. And so First Solar was holding this 20-period moving average. Beautiful, beautiful, beautiful. Maybe you get stopped out at 180. It reclaims, but nevertheless, wonderful chart. And so probably the most micro, or the tightest way of viewing trend, as opposed to a light general slope. But this is a very tight thing for stuff that's trending strongly. And this is when something is holding prior bar lows, or in the inverse, holding prior bar highs. So this is FRC, the now defunct FRC. And so this was in play. It breaks down, and sure enough, we hold prior bar highs in what's a very, very aggressive downtrend. And so if I'm trying to catch trends, especially in something that's super hyper in play. That's a very, very common trailing stop that I'll use, as you'll see when I get into more specific and real world examples. Another thing is holding a trend line. So someone on Twitter actually kind of tagged me with this chart because of so much I do about trading on the right side of the V once the turn is in. This is Bank of Hawaii. This held a trend line all morning. I know it's pasted a little bit off, but close enough. We end up breaking the trend, then boom, counter trend is in. We're off to the races. No reason to be long prior to that. If you're holding a short, no reason to cover prior to that as well. The final example I'm going to give, or the final kind of subset of identifying trend, is what I would call holding above a reference price. What is a reference price? This is essentially the unaffected price prior to breaking news or a key catalyst. So it might be the price of a stock at the close before their earnings after hours. It might be, in the case of this AMD, which had breaking news during the day, that 83.50 or so would be the unaffected price. So the way I would look at this chart is, one way of viewing it is, as long as we held above 83.50, that news would be viewed as quote unquote good, and it would be a positive signal. If we get below that 83.50, that would be a sign, maybe this news isn't as good as the market expected, or maybe I'm missing something here. And so doing that, we can start to then build rules that we're later going to do. And so much of this stuff becomes more powerful when these trends are aligning on multiple timeframes. A lot of people discuss the multiple timeframe stuff. I know Brian Shannon discusses it, so many people, because it's important. And the way I like to think about it is, the more people you get on your side, the better. I want the Chris's on my side. I want the Lances. I want the hedge funds. Every time frame, whether it's monthly, weekly, yearly, day traders, swing traders, I want everybody on that trade. And so this Tesla, this is pre-split, the $900 breakout back in October of 21. This was one of those things where this stock made a beautiful, huge move up, went up 6x, made highs at $300. Then we make a higher low. We then make another higher low. We come back to those highs and we break out on an earnings catalyst. This chart is as textbook as you can get, which is why I felt the need to include it. You have weekly breakout, you have a daily breakout, you have an intraday breakout, all with an earnings catalyst. So all of those trends are aligning, and we want to be capturing moves just like this. And then regarding the trailing stop I discussed, if you use even like a weekly chart, you're catching a good chunk of that using the prior bar lows to get you out. And so now, as I alluded to before, there's ways to go with the trend and still be on kind of that counter trend, right? So with this GME on January 28th, this is intraday of 2021, the stock was just melting in huge volatility. So where it gets scary is if you're fading on the downside, right? If you buy 210 thinking this is overextended, man, guess what? It went down another 100 points. And so I'm sure a lot of people were getting liquidated. A lot of people were blowing up in this. And so the key to do is just wait for that counter trend. And so people might say, oh, the trend is down, but I would define the counter trend as still trend trading, because you're waiting until that reversal. And I would define that again as the break of prior bar highs. So I'd be buying in this bar if possible and trying to catch this move higher. So much of my mean reversion was so elevated once I waited for that counter trend. I stopped drawing down. I stopped taking so much heat. That's one of the big things that transformed my big losses into bigger gainers. And so here's my first challenge to you all. I want you to make a list of all the ways you define a trend, much like the examples I gave, but what are some other ways you can think of? But then the most important part is to document it with example charts and ticker write-ups. As I'm going to say again and again, the more detailed you do for this little challenge, the better it's going to be. And so once you've really defined trend for you and your system and your style of trading, you can then make rules and systems based on this. So one rule that I'll kind of give you all that I've found other 8-figure traders also use, like one of my good friends, Kenny at SMB, we kind of both stumbled upon this rule independently, and it's probably one of the key tenets to our trading. That's not coincidental that we both stumbled upon this, but it is, I will never be long if a stock is steadily holding above VWAP, or sorry, I messed this up. I'll never be long if a stock is steadily holding below VWAP unless it capitulates. Vice versa, I'll never be short if a stock is steadily holding above VWAP unless it capitulates. So in those examples I gave, like that NVIDIA chart, if we're holding above that VWAP, I have no reason to be shorting it unless it capitulates, which it didn't do. And that can really help you avoid a lot of losses. Another thing is I will not take trades in range-bound or consolidating stocks. And I'll give you an example of that. But so many people end up in what I call no man's land, where the stock isn't currently trending. Volatility is compressing. I often use Bollinger Bands to demonstrate that for that reason. And when volatility is compressing, the range is compressing, so many people will tend to churn themselves there. And all their nice gains when stocks are trending then get overshadowed by some of those losses. Another interesting rule that I think is a great one to think about is I will size 25% bigger or some amount bigger when the intraday and daily trends are aligning. So what happens if you have something capitulating on the daily as well as the intraday? What happens if you have something breaking out like that Tesla, breaking out intraday and breaking out on the daily, the weekly, the monthly? How do you handle that? Are you getting bigger and taking advantage of having all those players on your side? And that's where, when you identify these trends properly, you can really start to take advantage and apply it into your trading with these rules. So this is a great chart. This is AVGO. Well, I guess Broadcom used to be AVGO, AVGO, and this was just May 26th. This stock exploded as part of the NVIDIA earnings explosion on the AI guide. And a lot of people on FinTwit were fighting this stock. This was its second huge day in a row. But what we find here is this was steady as she can go, right? So we were talking about the slope. If I were to do a best fit line, this slope is very, very steady, right? And at no point do we get away from it. I have this simple moving average. We're just hugging this thing the whole day. There's no reason to be short this thing while it's holding above these trends. And again, my one exception would be if it capitulates to the upside, but I don't see that anywhere. We don't have any crazy volume spikes. We don't have any crazy price spikes where things just really whoosh higher. We start to get a little bit off the moving average towards the end of the day, but really nothing to get me interested. So that's how you avoid a rip. That's how you stay with the winner. And that stuff adds up big time. And now I'm going to give you an example of no man's land. This was in IEP, the Icon Holding Co., May 25th. This stock was obviously getting beat to crap on the Hindenburg report. And so the way I look at this stock is essentially off the open. We made a down leg. We try to put in some type of a bottom and kind of stall out. And so what we'll see is at this point, we aren't making lows here. We try to make highs. We don't get anywhere. So a lot of people, if you're taking in kind of this blue circle, if you're shorting in here, that's going to be a bad idea, but just because you're still in the range, right? So I don't want to short anywhere in this blue circle. I really want to wait for it to break this bottom yellow line because now we're in a new price range. Now we're starting a new trend. And so all of this is what I would call consolidation. If I am going to play anything, I might consider a long out of that range. If you take these, you don't really end up in too much trouble. But again, at least in my view, shorting in here, while kind of this counter trend is attempting to bounce, those are going to end up being very low probability and probably take away from the trades where it does consolidate, then break later. So my second challenge for you all, make a list of rules to follow based on whether a stock is trending or range bound. I gave you a couple examples of real ones I use, especially not taking anything counter to the trend unless it capitulates. And then, of course, you define capitulation and everything else. Stuff like that is really game-changing to your trading. Even simple things like sizing up a little bit bigger when the trends aligned, that can be the difference between starting to really add skew to your trading so that when you get those pocket aces or those good hands, you really make it count versus otherwise. And that's what really helped me kind of not just avoid those losers, but start to really ramp on the big gainers. As always, charts and tickers with details, the more the better. And so now diving into when trends tend to start so we can spot them. A couple big reasons. First of all is breaking news or a fundamental catalyst. I'll give you a bunch of examples, but immediately that comes to mind is that NVIDIA earnings guide. Boy, oh boy, was that a big whopper. Another thing is breaking out of consolidation or ranges. So if we want to start combining these, the more the better, of course, right? So if we think about Tesla on that $900 pre-split level break, we had a huge breakout to all-time highs out of a range, and we had a fundamental catalyst, right? So you have all the momentum technical traders buying it. You have the hedge funds that are bullish on the stock, like the Cathie Woods buying it. You have shorts that are saying, oh my God, if 900 was my stop, I need to get out of this thing. So every single person, small or large, is on your side when we combine these things that start that trend. Another thing that people might tend to overlook, following the exhaustion or capitulation of a trend, you tend to get one in the opposite direction, like that GME chart I showed. And some other examples, like to tie it into the prior one, that AMD chart, we had a news catalyst. The Tesla had the $900 breakout. The GME was the capitulation. So I'm trying to give you guys real world to think about this and tie it in. These are the charts I was previously mentioning as a little refresher. And so when do trends tend to end? This is just as important, I think, and it really touches on a lot of what Chris was talking about in the prior presentation, although he definitely had insights very unique and different from mine. But what I tend to look for are, in one way, huge volume and price exhaustion, aka capitulatory signals, showing that like things got a little too hot or a little too bearish, euphoric or pessimistic, and that real flush out. That's so often what I look for is my number one probably favorite thing to signify an end of a trend. Another thing that tends to change trend is after there's been multiple large legs. The more legs in one direction and the larger these legs are, especially if they're accelerating in size, that's when you tend to also get more probable signs of a reversal. And then, of course, breaking news or fundamental catalysts that are counter to the trend. Another thing is when no consolidation occurs. So really consolidation to me is kind of that price acceptance, especially if something's made a large move. You need this equilibrium time period where the people that want to sell are able to get their sales, the people that want to buy and establish a new price, get their buys in. And so it's really just people found a little equilibrium where price is agreed upon. And that's really what sets this foundation. Much like those phases Chris was talking about, where you have those set ranges that things can either break out from or then break down from. So one example of this chart is Alibaba. So this was kind of a darling stock up a couple $100, but then as we all know, it got crushed last year. And what we found was around the President Xi kind of re-election and everything, we had that massive puke out where everyone said, China's done for, it's nobody can own any of these stocks. And what's so notable is look at that volume bar, because we had some big kind of volume earlier in the year, but this was just so many multiples of that. The price was a massive dump. So that's really kind of all the signals you want to see for peak pessimism that then kind of made the foundation of that move higher. So here's my third challenge to you all. Take some of the groundwork I laid and systemize reasons why you feel trends begin and end. I've not given them all. There's still many other ones. There's stuff that's going to be unique to you and your system, your observation, much like Chris had and other presenters have had. That's what's going to make it even more powerful is when you personalize all these. As always, charts, ticker write-ups will do you good. So now what we're going to do is dissect some of my big losses and big gainers. So I can show you kind of how I applied this to my own trading and how this led to kind of some of those big wins. Again, like I said, so often I wouldn't wait for that counter trend to be in place. I think most traders, myself included, we're never perfect. I still sometimes fall for this, and that's going to be one of my examples I discuss. And also a lot of times you can think you're just stubborn and smarter than the market and not listen to that price action. So one of the examples where even me, right, nobody's perfect, I still got in trouble was Tesla late 22. Tesla had been holding up exceedingly well, especially versus the market. Despite so much of tech having sold off, Tesla held up well, but then it starts to crack with some of the Elon Twitter stuff, and we start to hold this downtrend. I wasn't interested anywhere too early. Like, yes, it's a big move on a percentage basis. We're going from 300 to 160 in a matter of a couple months. But really, we're not making so big of a move. We're not extended below the lower Bollinger. We're not so far away from the moving average. We're not so far away from this trend line. But then what starts to happen where I really get caught, and I think a lot of traders kind of fell for this too, was in late November into December into the year end, Tesla finally started to puke out. And what happened is if we take that slope, we start to now accelerate. But the issue is we never had this real multi-day flush out. We have a lot of these inside bars where it's kind of price acceptance. So we're going to go one big down day inside bar, one big down day inside bar, one big down day inside bar. So yes, we're accelerating, but we're not really getting that flush. Another huge indicator of this is in our volume. So this trend is certainly starting to accelerate, but it's not capitulating. And I really want to wait for that turn. And I was fighting it. I did not wait for the turn. Shame on me. Broke a lot of my rules. And that led to a lot of losses. You know, it's some of that FOMO where it's like, it's getting there. It's such a mega cap stock making such a big move. And you wanted to kind of do that puke, but it just wasn't happening. And when you kind of settle on your I guess, compromise on your rules and break those, that's what led to me getting into a lot of trouble. When guess what? This never did end up like mega capitulating. And what you could have done is just kind of waited for that trend break where you're no longer making, right? And it's worth pointing out, we kind of have the lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, a little bit lower lows. Then we kind of make, I guess, a lower high, but then it gets broken, right? And so that's where you want to start to initiate. And that you break your rules, you end up in trouble, and you learn your rules after a decade, and we all still mess up. So now I want to show you the opposite of messing up, what living with the trend looks like. So most of my trading was intraday based. Really the huge bulk of it, I was essentially a day trader, and I would do a little overnight, some swing trading. But I really want to zoom into February 23, 2021. This was an awesome day for trading with the counter trend. The market overall was panicking big this day. The Qs were gapping down big. I highly recommend you all going back and studying this day. There were more tickers than just these, but I wanted to highlight some of the big ones. And the beautiful thing about this day is there was also a breaking news catalyst where I traded that with the trend. And so really this day was a pretty diverse opportunity set where if you followed these, there was a lot of money to be made, particularly the news catalyst. So this was a 7-figure day for me, both with the trend on the news and the counter trend. So let's dive in. First things first, workhorse. It's funny looking back with the passing of time because we know workhorse is now in the dumpster. But this stock was already pulling back. We had huge breaking news this day about its kind of financial viability going forward. A lot of what I did was news catalyst trading. So when that headline came out, boom, shorted as much as I could. We go limit down, we end up halting. So now look at the range of the stock, right? It started in $30. So if you try to analyze this thing, like so many people are going to end up covering early. My job is not to be that analyst. I know Chris, for example, works some of the fundamentals in, but I'm not smart enough for that. I try and just trust my system. And so this is clearly a sharp trend. We've got a big catalyst. So I was just going to do my 2-minute bar prior bar highs, like we discussed on some of those other things. And I end up having some incredible covers for almost all my size. There's no chance I ever would have been able to hold this trade if I just didn't have a simple system. And yes, that system won't always work. It won't always be perfect, but the goal is to find a system that in the aggregate works. And when you're trading with the trend on these catalysts, I took no heat on this. Much like if you bought AMD a month ago when it came out with their news, when you short workhorse on some of this news, if you're quick and that's your game, you're with the trend, you're never taking heat on this. You have a clear stop. Beautiful, beautiful trade. On the other side of the spectrum, this was buying stuff that panicked and flushed out on that market down day. So I was trading with the counter trend. This ticker SOS, this was not a huge winner, but a decent example. And what we have is the stock panics off the open. We then kind of start to firm up. 2-minute bars are holding prior bar lows, we have like a little break of prior bar highs, very clear entry, and very simple system allows you to capture that move. And again, because you're waiting for that turn, I'm not buying the $7 here. I'm buying it on what I call the right side of the V after that turn is in, and I'm taking no heat on that. Easy peasy, I have a tight stop. That is just a textbook trade for me. Some of the bigger winners, it's also laughable to see this chart, which was in the 140s. Stock really panics, flushes out right around the open. I again wait for that turn just based on a very simple system of prior bar highs being broken, and we make a really nice counter trend and capture that. And so the other key for people watching this is, why am I trading these tickers? It's because these tickers were the most in play. The workhorse had a huge fresh news catalyst. The SI, the SOS, the Tesla, which is going to be my next chart, these stocks were making the biggest, most extended moves. So if the stock market is panicking, I want to find the stocks that are panicking the most and flushing out the most, the biggest price ranges. And of course, that's tickers that don't have fresh news. So then I can capture that counter trend when they're bouncing. Final ticker, Tesla, more of a household name. This trended weak into the open. We break the trend. And so now once we break that trend, catch a really nice leg, we're kind of testing up towards the highs, light pullback. It's totally acceptable to have another buy there because you're still going with the trend, a little continuation play. Why didn't I sell on this bar? It's a little bit too early to sell because we just broke out. At that point, I might want to just give it to the breakout level. Allows me to catch just a little bit more. So the beauty of this day was stocks were hyper in play between both the market and the breaking news. I took no heat anywhere, right? So there were days in my career where I'd be putting up 6-figure days, 7-figure days. I'd be doing that on really tight stops because so often if I was ever drawing down, that would be a signal to me that, Lance, odds are you're structuring this trade wrong, right? It's one thing if you take a trade for size and it doesn't work, but so often if I was like really, really fighting or really, really drawing down and it wasn't just up, trade failed, that's a signal to me there's probably a smarter way to structure this. I don't need to be buying on the left side when things are still going down and we're holding prior bar highs as we head lower. I don't need to buy there. I can wait for that turn. And so my fourth challenge to you is for you to do the same project that I did, the same project that let me really break out. Dissect your own trading to find where in your strategies you could better optimize by always being with the trend or finding ways to not fight the trend. Then with all those rules and everything, I want you to document it with the charts and write-ups, and it really will change your trading. Like it did for me, and like it's such a worthwhile project. Like I can't think of any trader, regardless of time frame, regardless of specialty, that wouldn't benefit from this. So in summary, you're going to find all the ways to define the trend. You're going to make a list of rules that you should be following based on whether a stock is trending or range bound. Then you're going to systemize reasons why you personally feel trends begin and end. Then dissecting your trading over the last couple of years, all the winners and big losers. Where can this thinking better help you optimize your strategies? So look, guys, I'm not a jealous man. We can all fall in love with the trend. It's got a lot of love to give because I know it's helped so many people throughout history, right? From Jesse Livermore until now, thousands, tens of thousands, maybe hundreds of thousands of traders have all found that living with the trend, loving the trend has rewarded them and done them so well. So I want you to really take the time and reflect on this. Are there places where you can avoid losses by being with the trend? Are there ways where you can hold on and to the trend longer and find more reward? Are there ways that you can size up when the trend on multiple timeframes is confirming? Thank you all for listening, and I'd love to now open it up to questions.
Yeah, awesome, Lance. Thank you so much for that. And there are a few good ones coming in. I've got some as well. Thank you so much for taking the time to put that together. This is the perfect time. If you do have a question for Lance, drop it in the live chat as I go through these first few ones. First, there's a good one from Perk, I believe, about that 223 day. He was wondering if you could elaborate more about how you found the big movers to short or buy on the bounce. Were you really looking for stocks that had catalysts? Where were you looking to find those catalysts? Or were you doing any screens for high volume, something similar to that?
Yeah, great question. So when I'm trying to do those mean reversion plays where the stock flushes out and then I'm buying that counter trend, so I'm looking for stocks that in an ideal world don't have news, right? The market's down, I can't remember at this point, 2-3%, whatever, maybe more. I want to find the stocks down the most without news. It's not that I won't ever do mean reversion for a stock with a catalyst. I might do that, but it's much more difficult. In an ideal world, I want the stocks with no fresh news. They're just the ones that are panicking more than the market. Somebody's scared, somebody's dumping, someone's getting liquidated. So part of finding the right tickers is, for starters, doing the pre-market prep and figuring out what does and what does not have news. So, whether it's Trade the News, Bloomberg, Briefing, there's a zillion different news sources. A lot of them help you find out with like pre-market reports what's moving. Then the other tool that helps is there's a lot of scanners you can use or build or program. I've mostly been on the prop side, so I've had pro software that's not available to the public, but I'm sure people on Twitter or elsewhere can help you out with the names of public software. It does exist. I know a lot of people use it. But with a lot of these scanners, what I'm looking for is what's gapping down the most, what's doing the most pre-market volume. And a lot of software places also have just price spike filters. And you can, again, if you have programming background, you can kind of construct all this stuff yourself anyways, but there is definitely packages out there that offer this. And so what I'm looking for is what are the stocks down the most pre-market? Then off the open, what are the stocks really making lows? You can have filters for breaking new lows and showing you what percent they're down. And so I try to find those charts where it's like, whoa, Qs are down 3. I've done the work, so I know what tickers have news on them, why everything's moving and why. This ticker, it's been weak. Now we're really, really panicking. So a lot of it is a mix of pre-market prep, then having those tech scanners to identify that.
Yeah, perfect. Before I get to my next question, I do want to touch on risk management a little bit because it's such an important part of a long-term career in trading. Can you discuss the different ways that you manage risk to make sure that any one trade can't take you out completely out of the game?
Yep. So risk management actually was one of my biggest weaknesses, which is surprising to a lot of people that I could have had such a strong career. And part of my poor risk management, the only reason I had a career was because I was doing stuff with a lot of edge. So I could get away with some of these big losses, but that doesn't mean it was fun. So around this time, and this kind of is that story of wow, I need to really tighten my ship up, and I can't take these losses. They're just not fun. They're demotivating. Part of the issue with big rips is it's just they spur such a negative feedback loop. So I kind of had my moment of reflection, and a lot of those big rips came when I didn't have a stop. And it sounds like trading 101, but a lot of what I was doing was mean reversion when things were really panicking. And so part of those big losses came because I didn't have a stop in some of these trades because I wasn't waiting for the turn. And so the first thing I did was I removed any type of trading where I didn't have a stop. And look, there can always be flukes where a stock gets halted or a stock has fluke news on you. There's nothing that can ever take that black swan risk away. That's happened to me multiple times. But so step one, I'd really dissect any trade you have that doesn't have a stop and find, again, there is a way to structure it so you can have a stop. So that's step one. Step two for risk management then is knowing how much you want to risk in different types of setups and also based on the quality of setup. And so I actually tweeted this out yesterday. It came up from a great question with one of the traders I work with. And he said, how do you kind of really choose those risk amounts? If you know a setup is great or whatnot. And my answer was, you want to risk towards what would be an optimal amount, but you never want to risk so much that if some trades go wrong or a couple trades go wrong, you never want to lose enough that it becomes demotivating or anywhere near the amount that can take you out of the game. And so that's kind of how you roughly find how to do that. And then I'd say, okay, these are my setups. These are how I would rate. This is an A setup for this. This is a B setup. This is a C setup. Then I'd have set risk amounts. Okay. If I'm going to risk maybe 10K on an A. I want to risk 3K on a B. I might only want to risk 1K on a C. Whatever is the right amount for you. There's no perfect answer, but it's really about kind of systemizing your playbook, always having a stop in there and kind of really deducing what am I okay taking that won't mess me up and won't bother my motivation and demotivate me and all that.
Yeah, perfect. And I just want to say before I ask my next question, I really love the challenge idea. I think that's perfect. It really emphasizes the need that you need to, establish rules, but also put in the work, find examples, and that's how you kind of build, not only the rules, but also kind of the mental intuition about a setup and recognize different characteristics. So I think that's really important. Would you be able to go back to one of the examples about, it might be the Tesla one where you're talking about the turn and the start of the right side of the V, because my question is, if you could go a little bit deeper, yeah, I think this is good. What are the characteristics you look for to identify that the right side of the V is beginning? You've definitely touched on a bunch, but just to reemphasize that point, because I think that is a really key aspect of your expertise.
Yep. So let's dive down a little bit more into that. Trading really is a game of nuances. And so people will say, oh, this is death by 1,000 paper cuts or whatever. And so much is the more nuanced and detailed you become, when you start to play the very, very best hands, that's what gets your win rate much, much higher. And so I didn't want to just drown people in charts, but if you were to pull up the daily charts for these tickers here, what you're going to find is these daily charts were so exceptionally extended. Like these stocks were puking out huge moves in a matter of a couple of days, right? So what we have is we have something that's totally puking and capitulating on the daily chart. We have something that's totally puking and capitulating on the intraday. I cut off the volume on this chart just I didn't know how much viewers would be able to see if I made things too small. But in all these charts, volume's capitulating big. And so if you try to do this in stocks that aren't really in play, right? Like my personal belief is 99% of stocks most of the time, 99% of the time are just noise, right? And in a lot of the timeframes, there isn't edge unless something is trending or making an exceptional move, right? If you told me, Lance, you need to spend your career trading Sirius or GE or this or that stock, everything rotates, whether it's in play or out of play. And I want to move to the markets and the tickers that are the most trending, the most in play. And so the first step for everything is to be in the right names. And it doesn't matter your time frame, right? Like there's years where if you were to trade oil or nat gas or gold or whatever, it's not going to move more than a 0.5% today. It's going to go nowhere. It's just range bound years. But if you traded nat gas, last year or oil, the last couple of years, it's like you were going to do exceptionally well because it was in play. So then within that, really what I want to find is, and again, like those details that I'm touching on, so volume, what does volume capitulation like? So one simple heuristic I'll throw out is in an ideal world, I want to see 2x volume on that bar than the prior bar. So that might be at a daily time frame. That might be at the intraday time frame, ideally both. And so when you get something that's doing huge puke out volume on the daily, then intraday it does huge puke out volume. That's what starts to really align those things to increase those odds. So those are some of the nuances I'm looking for, right? And again, it doesn't mean I won't trade something if it doesn't align, but that might affect my sizing. It might affect how many attempts I choose to give it. And so then the bigger and more extended, the better, right? So let's say this Tesla didn't work because people will say, oh, Lance, how do you know? Maybe you could have bought here, right? And that's totally true. And if you stop out, which I do all the time, that's fine, right? But if something kind of gets better where it's a faster move, it's more capitulation, it's gone further now, that's what you really want, where all those things are just getting better. And so I'm really trying to get my odds as high as possible on my side, where those moves where the price is just skipping and it's like, oh my God, how are we here now? We were just there, like a VWAP, Broadcom, AVGO. That buyout still messes me up. But like Broadcom, when that went to 920 that one day, that unlike the prior days in Broadcom, where I had those charts up, it was steady Eddie, right? Slope of one. That stock just ramped off the open, right? After multiple days, where that stock on the daily chart, if you got Chris up there, he would have said, oh my God, look how extended this is above the 200 moving average. So you get all those swing traders saying, oh my God, this is becoming a sell. Then you get all those day traders that are saying, oh my God, this just went too far too fast. And so it's aligning the confluence of all these nuances that really kind of make it happen.
Yeah, that's super helpful. And there's a kind of a similar follow-on question from the short bear. What do you look for to really size up? What are some of those nuances that would tell you this is an A++ setup and you'll commit more capital to that trade?
Yep. I mean, really, we should have Lucas answering that question as the real GOAT. So I think this is also where it's so important to be very systematic. Some people like systemizing, some people don't, but I think most people would be better moving further towards that. And I think what's so cool about those challenges I gave is it really forces traders to get things down on paper, right? So what you can do if you want, you can write down for each trade category you have. Maybe it's breakouts, maybe it's mean reversion, maybe it's a breaking news catalyst. And what I would recommend you do is start to write all your different categories down, right? So let's take breaking news. With breaking news, we can have strength of the headline. How big is this headline potentially? Is it something like they fired one employee, or is it Workhorse saying we're screwed, it's the end of the world, it's over? Or is it NVIDIA saying, guess what? AI is off the charts. We're guiding up some huge, massive amount. So one variable is strength of the catalyst for this case. We can also say, how in play is this ticker? Something like gold on a big catalyst is not going to move anywhere close to an NVIDIA, right? Gold, I like to think, is probably never say never, but the odds of it having a 40% up day, much lower. So how in play or volatile is the stock? We can also do another variable. Is this stock breaking out into new prices? How many people do we have on our sides with those trends? What does the volume look like in this? How is the chart setting up so that I can have a tight stop, right? So if I'm able to get that NVIDIA on that headline, and how I mentioned that reference price is defining trend, if I can get my stock really close to that reference price, if I can get that within 5 points, that's a way different trade than if it's 10 points away from that reference price. So we start to have all these different variables, right? Maybe the stock has massive short interest. If it is massive short interest, I'm going to think that can go way, way higher, right? What is the positioning and the sentiment? NVIDIA was a little bit overextended going into that, right? There were people that were very short that name. When that fundamental catalyst comes in and blows out that sentiment, oh my God, those people need to cover. And so what I would urge people to do is take each of their trade categories, systemize all the different variables, rank them as far as importance. And so then when that trade comes, with more and more practice, you can know your most important variables, how strong that catalyst is on them, and then you can size it accordingly based on that. And so there's a lot of people I know that crushed that NVIDIA earnings headline because they knew all those variables and they did that work. And so I think that is what really helps people size. But what I always say is do gradual, right? Do gradual and build up over time. You don't need to be a hero. The worst thing you can do is size up too much, take a big loss, and then take a step back because you're scared, right? Never push your comfort zone so much that a couple losses are going to demotivate or mess you up. Thank you, Lucas.
Yeah, awesome. There are a few questions about your specific entry points. Are they typically above, it looks like this one, the 2-bar high on that turn? How do you decide basically that pivot point, that spot, that specific spot on the chart where you're going to enter your position?
Yep. So a lot of people ask me, why do I use 2-minute bar? It's not magic. Again, I personally view that technicals are all fractals. I can apply this to 1 minute, 5 minute, daily, week, month, year, whatever. It's all kind of the same. There's pros and cons to each. The reason why I use 2-minute bars is simply because for me being a day trader, it was the right level of granularity. And I was able to catch the type of leg that I wanted to catch, right? It would be kind of silly to be a day trader and use like a monthly chart where I'm getting in, making an entry, then I don't do anything for the next month. It would kind of defeat the purpose. And so one thing that's interesting, especially with the mean reversion plays, is a lot of this stuff doesn't need to be backwards looking. And so often when stocks are really, really in play and melting, they're going to hold those prior bar lows. And so when stocks are holding and trending the prior bar lows or the prior bar highs, in this case, the prior bar highs. So in this case, you can, without the benefit, or let me rephrase that, you have the benefit of hindsight, where in this moment in time, I can see that this stock's largely been holding prior bar highs. In that FRC chart that I gave, I have the benefit of hindsight where I can look and I can see that that stock on the way down is holding that. I don't need to know the rest. I know that this was trending down cleanly. In the GameStop example, that stock was melting and holding those prior bar highs. And so in real time, I can recognize, whoa, this is making a really huge trend. And as it's trending, this is trending cleanly defined as holding that, right? And so last week I posted this chart of SDA, Sierra Delta Alpha, made a beautiful clean trend higher, kind of capitulated. And sure enough, it breaks and we hold a super clean trend down. And so many people say, oh, that's hindsight. But it's not, right? Like in real time, at that moment when it turns, I can see how huge that trend was. And that it's not coincidental, right? That's the point. If you all trust me, I'm telling you that given something makes a huge in-play trend lower cleanly, the probability of it turning cleanly is way, way, way higher than noise otherwise. And I think that's what people conceptually miss. And that can be a very game-changing concept for people.
Yeah, I think that's a key nugget there. I also saw a few questions about how you decide to sell your position after it's moved up the right hand side of the V. So here I see you've got a sell mark there. Did that take out a 2-minute bar low, or what's basically your decision?
Yeah, exactly. Yep. And so for the most part, like I do tend to intentionally simplify things for these presentations. The reality is my trading was a mix of system, and science, but also a little bit of an art. But I found when teaching people, right, I probably, had a handful of trainees, dozens of people I've mentored over the years. When teaching people, you want to give people the simplest system possible to remove discretion and to, in real time when all this is happening, as easy as possible. So when I would train people, I would say, look, this is your rule. Your trailing stop is going to be those 2-minute bar lows in this example. And then they'll see my trading. They'll be like, Lance, why'd you take a little off here? Or why'd you do that? And it's like, look, that's part of the art. And so to give people a simple rule of when there might be the exception to my normal one is if something, let's say I'm riding a trend higher and then it capitulates in my favor. If something's capitulating and getting euphoric and it's pulling away from that trend, I might take off some or even all. So on Twitter, I have a write-up of this like MSTR Carvana tech panic day last year, I think in May. And I discussed why I sold my MSTR into kind of a upside capitulation. So in general, I try to simply either use the level and then that prior bar trailer. But look, there are exceptions, and it's the simplest one I can give is if something capitulates in my favor and gets overextended, I'll definitely start to take some off.
Yeah, I think perfect. That's helpful. Another good question from the short bear. How does Lance include sentiment into a capitulation trade? Does he wait until everyone is vocally on one side?
Yep. So I think sentiment is so important. And so what I really get people at SMB to do, or really anyone I work with, is to have a running dialogue in your head of where sentiment might lie. So let's say, and again, you can use any scale you want, but let's say like 0 is neutral. The stock is just dead flat doing nothing. And let's say positive 10 is bullish, slope of 1, like very sustainably bullish. And let's say 20 is like euphoric, where it's so bullish, like you don't even want to be long anymore. And vice versa, bullish, negative slope of 1 is negative 10, then just like pure puking panic, end of the world is negative 20. I try to always have a running dialogue of what the stock, whether it's the intraday chart, whether it's the daily chart, whether it's reading the tape, right? So if something is -1, I keep in mind, wow, Lance, like, okay, this is steady bearish. If I'm doing a mean reversion, I want every chart to really become the -20, panicking, puking, everyone's scared. And that's so important because what happens is when everyone's being liquidated, when everyone's scared, that leaves everything so skewed the other way. An example of that is the Tesla chart that I went over, right? Like when Tesla goes from 300 holding up strong and then boom, it goes to 100 in a matter of a month or two, everyone's saying, oh my God, this is the end, blah, 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 blah. If anyone's going to panic, they're going to panic then. And what happens is you get this massive volume turnover. And at that peak sentiment moment, you get people establishing new prices, right? So all those people that are puking their shares at 100, you get this whole new wave of buyers that are now new longs. And that leaves this very asymmetric thing as far as the market participants. And so I'd say I'm always trying to think like, where is sentiment and am I trading it correctly, right? Like if something ever becomes, positive 15 or close to positive 20 where it's euphoric and I'm long, I recognize I need to get out. That's where I might start to scaling some out. So like, that's also a really good task for people is to have this internal dialogue that as these charts are moving, you're constantly saying like, okay, we're consolidating, we're actually holding up like really, really well. So we might even be, +3, +4, like up, we break out. How strongly, how quickly are we going? Is it a sustainable breakout? Are we kind of puttering around? And like that dialogue is really important to help you kind of gain a sense of this. And it's all based on like that sentiment.
Yeah, great. And a question I wanted to ask you was, after you've identified a stock that you see it's flushing down, you're looking for that mean reversion trade, what are you specifically doing as you're watching it develop that setup where you're waiting for the turn? What kind of mental processes are you going to prepare yourself for the trade? And what are you physically doing? Are you setting alerts right below those highs as it's flushing down? Just kind of walk me through, as you're ready to prepare for a trade, what are you going through? What steps are you taking?
Totally. So one simple thing I would do is I would use 100 shares for this, but like the more important point is like you can use 1 share or whatever is going to be kind of a rounding error for you. So from one of the prior questions, I talked about having a watch list of stocks down the most. And so what I will always do is if markets are weak and things are panicking, I'm going to throw like I would do 100 shares, but again, you can use 1 share, like 100 was just, pretty small, but like I would throw these limit orders way deep low in the market where I might be interested if a stock really, really panicked, right? Because some of these opens can be really hectic or some of these trading days when stocks are panicking. So I always try to have like a little kind of just starter position way below the market where it's like, if this gets filled, like, okay, Lance, you need to watch your attention. And so when these moves are happening, I'm really just going through that checklist, right? So I can avoid the Tesla losses. And so I'm not falling into the trap. And it sounds silly. Like at this point, I don't need a checklist just because I've done it so many times. But when I was learning and developing these skills, I would do the systemizing of everything like I described in this presentation, and I would build this little checklist. And on my desk, I'd have all these little note cards. Okay, if this is going to be mean reversion counter trend play, this is my checklist. If it's breaking news, this is my checklist. If it's a breakout, this is my checklist. And when these things are panicking, I'd just be rereading that and going through that and going through that because that allows you, it helps you make or avoid unforced errors. And so it's so important to know that criteria dead cold. Because I think so many people end up falling for these traps because they don't do the work to know what everything is. They're not conscious. Like, to build this awareness and this consciousness, you need to be drilling yourself in real time. It needs to be the stream of consciousness in your head to help you avoid those errors. And if that means having a little paper checklist that you're running through as you're typing these, and you have your little alerts lower, it's so important, and like any little mantra, like on these big days, I'd have on my daily report card, wait for the turn, wait for the turn, wait for the turn, live with the trend, because it's that internal dialogue is essential when the pressure's on. You need to perform, and this game moves fast.
And it sounds like some of those steps are to, really make sure you're being disciplined and help with the mental side too. So you're confident and ready when you finally do get the turn that you're waiting for.
Yep. And your job during the day is really just the real progress and work happens after hours. During the day, if you're decently experienced, your job is to execute. And part of executing is making sure, like, if you've got this system and this game plan, your sole job is to follow it and make sure you follow it. It's not to think about what tweaks can I make. It's not to be studying other stuff. When you're playing the game, right? Like if you're playing in the pros and the NBA, nobody's thinking about tape and what they're going to do and what drills they're going to do. They're just saying, I need to execute. This is what I need to execute. This is our game plan to win this game. And when the Heat play tonight, right? That's what they're going to be thinking about, is just what are the things that we decided is going to make this a success. I need to keep that front of mind. I need to not get emotional. I need to not get FOMO. I need to not worry about the scoreboard. I need to execute based on what we decided.
Yeah, perfect. There's some other really good questions coming in. First, from this person: after capitulation, sometimes the low is breached before the real move happens. Does Lance set his stop at prior bar low, or does he give it a little bit more room? So I guess in the circumstance where you've got that capitulation, maybe a structure forms there, it undercuts a little bit and then takes off. How do you kind of handle that situation?
Yep. So that's a great question. And well, I think most of all, I have a great point to make on this is I am always getting out at my stop if that gets breached, right? It's just, again, it goes back to that risk management. Even if I think like, oh my God, could this stock really do another leg? So often, if those lows are getting breached, the answer is yes. And I think the more important point here is if you're in the really, really best setups, your win rate goes up. And so, yeah, I'm not saying like that never happens where you kind of just get just wicked out and then it kind of just goes. Like, I tend to, if I end up missing that, kind of so be it. But like the best thing I would equate is I like using poker analogies. Sometimes you might have what you think are pocket aces and it just doesn't work. It kind of gets wicked out. Like at that point, that's the equivalent of like, Jack Queen, 10 or something coming on the board. And you're just like, oh no, my hand looked awesome. But if anybody just caught three of a pair, if anybody just caught a straight, now I'm in trouble. And so I tend to not beat myself up too much when I get stopped out. But what I will say is the absolute best trades where everything is aligning in your favor, so often you avoid those situations because it's just everybody's recognizing, oh my God, that was a flush out, that was a panic, and you're gone. And it allows really this cushion in your trading where like when prices move so fast and the volume is just so high, you really tend to avoid a lot of those little chop outs. Like, again, I'm not saying it never happens, but in the really best setups where when you have your variables, you're like, oh, this was 8 out of 10, 8 out of 10, 9 out of 10, 10 out of 10. Most of them tend to just be gone. And it's not coincidental when you go through the data like that.
Yeah, perfect. There's another good question here from Alan. Does Lance have any tips for overtrading or having the confidence to wait for proper setups? I think overtrading, is an issue that a lot of traders deal with. So yeah, what are your thoughts on that, and how would you encourage patience and the ability to wait for those A+, 8 out of 10, 9 out of 10, 10 out of 10 setups?
Yep. So this is a big one. I've done a really good tweet, I think, on this. So if you advanced search the one Lance B on Twitter, Overtrading. But essentially what I say is the number one thing, not the number one, but the first step is to figure out why are you overtrading? what leads to that, not just what the trades you're doing. Because like if a trade falls into your system and you take it and it doesn't work, that's not overtrading, right? That's just your system needs refinement. Overtrading is where you're trading things that are not in your system. And then the question is that because you don't know clearly what is and is not in your playbook? Is that because you're getting FOMO? Is that because you're trading out of boredom? Is that because you're trying to make something happen when it's not there? Is that because somebody else in your chat room is involved in it and they're a good trader, but it's not in your playbook? So the first step is to really diagnose why are you getting involved in these setups? Yes or no, are they in your playbook or not? Then once you've dissected them, you need to find the commonalities. One thing at SMB Capital is, there's a lot of great collaboration and everything, but for so often, especially once traders have some experience under their belt, I find these traders don't recognize that like they've reached the point where they just need to trust themselves, and they might get involved because the ticker is in play or because someone else is involved. And it's like, no, you're at the point in your career where it's time to go without the training wheels and just trust yourself. And they haven't recognized that yet. And that's actually what's slowing them down, is they're still making, they don't need to key themselves off to others. They can trust themselves now. And so then once you figured out why, the most important step is to then build systems to avoid that. So what does that look like? It might be, okay, how can I reduce FOMO? How can I reduce noise? Maybe you only allow yourself a certain number of trades. In slower markets, what I would do is I would call it the 3 golden bullets. I have a friend that ended up doing this, and he's kind of like a gun fan, and he has like literal bullets. He's like, I get 3 of these a day. I only get more if my 3 trades were all in my playbook and everything else. And so there's little rules you can make, or literal systems you can put in place to avoid the cues that make you make these mistakes. If you tend to do 10 trades during lunch, okay, maybe it's time to just like step away, eat lunch, keep an eye on the market just in case anything crazy happens. Maybe if you've lost twice in a ticker and you tend to overtrade at that point, maybe you can just, X out, do 0 share tier that ticker. So that final step is really, once you've identified why you're doing it, how can I build a system that allows me to avoid this?
Yeah, excellent. And earlier you mentioned the daily report card at Trillium. Could you dive into some of the criteria that was a part of that report card? What would you grade yourself on every day? And maybe just, as a larger topic, the importance of having something like this and the importance of journaling and tracking everything.
Yeah, great question. If there's any super easy thing people can do to start elevating their game, like this is another great thing. So I've posted on Twitter, and I've even done an SMB Capital video on this. It's kind of, I think Mike kind of really got the trend going for a lot of this. But I've shared my template of what my daily report card looked like. I would fill this out every single day without exception. And people take this up on FinTwit. They'll do it for a week. They'll do it for a month. They fall off. I did this for years, never, ever missing a day, right? And so first thing is the daily report card consists of one most important thing you're working on to elevate your game. For me, like I said many times, it was, I am going to live with the trend. Every trend I do today, my goal is to make it not fighting the trend. And then you also have your rules and your system for how you're going to follow that. Maybe it means I need to wait for prior bar highs. I need to do this. I need to do that. I'm going to be conscious in the trade. And then, so what you grade yourself each day is whether you followed, it's not whether you made money or not. You grade yourself on whether you followed that objective. So if it was trading with the trend, I might give myself an A if every trend followed with it. And then it would also include kind of, you can make it however you want, but I would include a detailed write-up of each important chart that day, only the best ones. It also include during the day, I would do a pre-market temp check, meaning like, am I well rested? Am I focused? Or am I feeling FOMO? Am I sick? Am I under the weather? Am I frustrated? Am I in a hole? And that would actually dictate how much I might risk that day. So if the market's super in play and I'm feeling great and I've been trading really well, I'm going to push my risk that day. And every couple hours, I would check in and kind of do, I would take a mental break and say like, okay, have I been following my rules? Have I risked the amounts I should be risking? Have I avoided what I should be avoiding? And it's all a tool to really increase consciousness and awareness each day and to make forward progress. Because so many people slog around aimlessly when every single day I want it to be better, even if just a little bit, than the prior day. And so no day would go by where I didn't analyze the charts and figure out some way to make myself better and really do the deep review work.
Yeah, I was going to ask a follow-up on that. Of the trades you do take or the ones you didn't take but you should have, what type of post-analysis do you do to, take away something from that trade so you can be a little bit better the next time that situation arises?
Yep. So I was a real active trader. I might trade on an active day 25, 30 tickers, maybe 5 to 10 on a slower one. So it would just be impractical and not the most value for me to write up every single one. So I would really find what are these standout tickers, whether I traded them or not. Like some people are like, oh, should I study my missed trades? And it's just like, well, do you ever want to hit them in the future? Yeah, I would hope so. And so whatever the big tickers were, I would use Evernote, but people use Notion, whatever. There's all sorts of things. I would take the chart. I would annotate the chart with what the proper entries were, any other notes I wanted to notice. And then I would do a very detailed write-up. The more important the play was, if this was potentially a play of the year or a play of the month, that is going to get a multi-paragraph deep study from me. If it was a slow day, but hey, this was the one op, I could have made 5K, 10K, maybe it gets a little paragraph. If I'm burnt out or lazy, look, maybe I'm just going to clip the chart at the least. This stuff does not take a lot of time. And the beauty of it was then, over the course of years, I had this amazing database. If I look back in my Evernote, I have the 2021 top ops. I have the 2020 top ops, the 2019. I can go back all these years and find the 20, 30, 40, 50 best charts of each year. And to be able to run through that and get reps and restudy that, it's just such an effective way of studying. It's incredible.
Yeah. And, obviously just like creating that resource for yourself, that's going to cement in your mind exactly what you're looking for and help build that intuition.
100%. Even if you never review it ever again, it's in there.
Exactly. There's a really good question from Arif. Lance, do you trade this type of capitulation trade if it seems to occur during lunch hours? What time period of the market provides the best outcomes for capitulation trade setups?
Yep, great question. I think without a shadow of a doubt, the most capitulation tends to occur off the open. Why is that? The reason why is obviously a lot of stuff happens overnight, and the market really hasn't had the price discovery mechanism until that open. So often what might happen is news comes out or the market panics overnight, the market's gapping down 2, 3, 4%. And yeah, the indices and the futures have been able to trade. But if you're trying to panic out of, I know Tesla made this great panic on when the Russia-Ukraine war was escalating. And it's like, look, if this stuff escalates overnight, you don't have the chance to sell your Tesla. You might be able to sell Qs or whatever, but you can't sell the Tesla. And so off the open is where you tend to get the most flush out. You tend to get the most people that need to liquidate. So I would say the open is definitely the best. One thing that you do need to be wary of, especially midday, especially around the lunch hour, is most stocks are kind of range bound and consolidating then. And so if a stock is doing some weird move around lunch, I would be a little worried. Is there news out there, right? Because I'm really trying to do this in stocks without news. So it's one thing if the whole market's rolling over and everything's flushing out. If it's just one stock doing this kind of idiosyncratic move, I'm extra cautious of making sure there's no news. I guess that would be my one warning. Then, of course, we tend to also get panics into the close, especially if there's big Fed days or big panics or in 2020. The open and the close tend to be pools of liquidity, especially the close. So those are kind of the times where I think you're most likely statistically to see them.
And if there's a major announcement that's going to be coming on, Fed minutes, something similar to that, what do you do to prepare for that event? How do you do you have a list of tickers that you're ready to go to if there's a potential for a mean reversion play? What's kind of your process for prepping for a potential, game-changing news event?
Yep, sure. So for most news things, I want to be with the trend. So with the Fed, or any big kind of even call it like CPI, whatever else, any macro event, any news catalyst, I'm largely thinking, how can I go with this trend? What are the tickers that are going to be in play? And there's essentially two ways, right? Well, not really two ways. There's many ways, but the two big things I look for is first the breaking news headline. Will the Fed say anything offsides? First of all, you need to prep and know what is offsides. Where does sentiment lie going into this? Have stocks really, really run up expecting one message? What would be the offsides for where the market's positioned? We talk about that pendulum again, like the question Lucas asked. If stocks are maybe like a 13 or a 14, we're starting to get a little euphoric into this meeting, and then the Feds just rug pull everyone, I am going to be super prepared to go real aggressive on that short. So that breaking news headline is the first way I might play it. The second way is waiting for something to set up where we make that initial move. We then have a really nice consolidation. And then I want to find the stocks holding up the most. What are the stocks that made the really big move, but then are barely pulling back, consolidating super tight? I don't want to play it in there, because that I consider the range bound consolidation. But boom, once they break out, I might want to hop on and really look for that move. I really won't, for me to fade and do mean reversion with a catalyst, especially something like the Fed, CPI, whatever, it would need to be really, really exceptional, meaning, okay, the market's going from 2% to Qs plus 3, and something just really capitulated to like plus 10%. I would need a huge spread versus the market for me to want to get involved. It would need to be a real big flush out on either side.
Yeah, perfect. Just have a few more questions here. First, let's see. I saw a good question here. Here's what it was. I remembered. So how would you classify the types of setups you trade the most? And of those, which is kind of your preference, which you tend to trade the most, and what's like your most profitable type of setup?
Yeah, that's a great question. So I had a lot of, I know I get kind of pigeonholed into things, rightly so, but I kind of really traded everything from merger arbs to imbalances, from low floats, mean reversion, with the trend, breaking news, swings. So I really did a lot of everything, but the bread and butter would probably have been probably the mean reversion plays when things did panic, or that would have to be number one, just because there were some really crazy days, whether it's like a GME AMC panic or during the COVID panics or some of the flash crashes. So that was huge. Breaking news would probably have to be my second category. I don't think I was probably I think I was probably one of the best in the world at the capitulations. I think I was probably, there were a couple people better than me with the breaking news, but I was pretty damn good and would just do the size. So I think that's number two for me. And a lot, I would also say, depends the market. Like what I really talk about is finding the broken slot machine and like not getting too stuck in your ways. So there's some years where you have certain themes, right? Last year was CPI. This year's banking crisis. 2020 and 2021 were meme stocks. 2000, was it 18 or 19 were the Trump tariffs? But you always have these themes that are really driving markets and the biggest moves. And I really want to move to wherever that volatility is. Like so many people say, oh, stick to one product and one type of thing, watch gold trade every single day. It's like, you can watch gold trade every single day, but let me break you the bad news. 99% of the time, GLD, spiders, all these super liquid efficient instruments, 99% of the time it's noise. I'd rather find like the 1% in play thing each day and study that, and you're going to learn so much faster. And so every year I try to ask myself, what is the theme? What is the market offering the most reward to trade? Some years are hot IPO years. You want to know what I do that year? I'm an IPO trader that year, right? Because that's what's in play, right? There's been like when Fiverr IPO'd or Alibaba, or when those Chinese IPOs were going nuts. Like you need to find whatever's in play, and that's what I'm going to adapt myself to. And so many people are like, oh, I've never traded CPI before. Well, guess what? Nobody has. CPI was never in play. And the people that did the best We're the people that recognize CPI is going to be the theme this year. I'm going to adapt to this as quick as possible. And because they're adapting faster, they're able to hit it harder before the trade goes out of play, right? Because the more attention and attraction you get, boom, starts to become more efficient and out of play. I don't know what the next thing will be. This year was clearly financial crisis. And a lot of that was you had huge breaking news headlines. You had huge capitulations. I'm trading all that, but whatever's a crazy thing. As I like to say, whether it's socks or stocks, I'm going to be there.
Perfect. And do you have any tips for, helping identify that theme early for, paying attention and being ready?
I think being open-minded, you never really know where it could be, but I think if you're open-minded, it's not really a secret. What are they talking about on CNBC? They were talking about CPI all of last year, the banking crisis. If I had to take a guess, what might be the next theme? We could be seeing AI now just with the NVIDIA, and you don't necessarily need to be Nostradamus predicting all this stuff, right? Yeah, you can sometimes take a guess, but a lot of times, trends don't last a day or a week. I can see that NVIDIA earnings and I can be like, oh my, AI could become the theme for the rest of the year. So it's not so much about being some people are great at that. I know a couple traders that are incredible predictors, like this dude Graph, but it's for normal folk like me. I just keep my head on a swivel. And look, AI could be next, or it could be some idiosyncratic black swan. Who saw COVID? Nobody, right? But when that happens, you gotta just keep your head on and pay attention to what people are talking about.
Yeah, great. Lance, just one more question before wrap up. This has been fantastic. How do you handle halts in stocks that you're trading? How do you analyze that when it's part of the down leg, and then also if you get in it and it's halted, how do you manage that situation?
Yep, totally. And so part of being with the trend and trying to live with the trend is I really try not to be on the other side of a halt. Meaning if something's going limit down, I probably want to either be short or flat and definitely not long. Again, that's my general rule. There are exceptions. If something's just so panicked and so capitulating, and I don't think I'm going to be able to get stock because it's going to halt and just gap up a zillion, I will get some stock. But I would say the amount of times where things go so much further than you expect has made me create the rule. I mean, we saw Kodak. Was that 2020? I can't really remember. I mean, we've seen some things really go super nuts. And so I try to never be on the same side. In fact, I always tend to be with the trend. And what a halt effectively is it's an imbalance between supply and demand, right? The reason why it's halting is because the clearing price based on all of the selling should really be lower. So I don't want to, if the market's saying the clearing price in this moment in time should be lower, I don't really want to be on the wrong side of that. Unless it's really special. And the other thing is vice versa. If I'm long into some of those, if you want a great example, there was WAL, the day it went from 30 to 8 or something, then bounced back to 32 or whatever. A lot of people took sales too early, even though the trend was so strong, because they had a price target in mind rather than riding the wave. I just want to ride the wave, whichever way it is. As long as that wave's going to take me, I want to be a part of it unless it really starts to go nuts. And stuff like WAL, where it's just limit up, that stuff can really go and surprise you. And I want all that asymmetry. I almost never want to be selling into those up halts because you might really get some really nice legs from that.
Yeah, great. Perfect, Lance. This has been awesome. Where can people learn more from you about your style, and also any last words of advice, encouragement, motivation for all the traders watching?
Sure. Well, as all the haters would say, this blown up, washed up, fake scammer trader. I run a nonprofit called the Impact Competition, impactcompetition.org. And what I do is I host competitions at colleges where students get to tackle local social issues in their community. I give them cash prizes. I give them seed money to the winning team. So we have students tackling gun violence in Chicago. We have students in Houston helping food insecurity. We have youth mentorship. We're at a dozen schools. Always appreciate any support there. For all my trading content, you can follow me on Twitter at @TheOneLanceB. My tip for those struggling is I'm kind of a big fan of Buddhist philosophy, and there's this one Chinese farmer parable. What might seem bad in the end, might be bad, might be good. What seems good, might be bad. And I'm just a true believer in having faith that everything works out in the end. And so whether it's through trading or something else, have faith in yourself. Life is special. Life is beautiful. Just enjoy the ride, man, for whatever it is. Enjoy the process. And when you do that, it takes care of the rest one way or the other. So feel free to reach out. Always trying to help. And thank you all for listening.
Yeah, Lance, this has been really great, and it's a different perspective than a lot of what the other traders are offering. But as we mentioned, we were chatting beforehand. There's a foundational truth to all the trading styles that are successful. So thank you for sharing yours. To everybody watching, I hope you enjoyed. Please go ahead and leave a like down below for Lance. Subscribe to the channel.